प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on the Business Today show. I'm Aabha Bakaya. Let's take you through the headlines. Cabinet clears 10,683 crore rupee PLI for the textile sector, increased MSP for Rabi crops. Telecom sector relief package and auto sector PLI not taken up. More bad news for Maruti Suzuki. Production in August was down 8% on chip and component shortage woes. Small, popular cars worst hit. Apple sends the tech world into a tizzy as it sends out invites for its September 14th launch event. New iPhones, iPods, and much more to look out for. We bring you a preview. Sensex ends a listless session, 29 points down. The Nifty also dropping about 9 points. Kotak Mahindra Bank, Power Grid, Grasim, some of the other stocks in focus today, including BPCL, top gainers on the index. Bulls seem to be in no mood to give up on the markets and let stocks correct. Today was another day of consolidation for the benchmarks, which witnessed some selling pressure on profit booking, but came off the lows smartly with support of particularly banking names. The Nifty 50 finally ending the session nearly flat at 17,353 and the Sensex closing at 58,250. That's just marginally lower. Financials, industrials, some of the top performing sectors this time around. IT, auto, telecom and metals, that's where we saw the losses. Telecom shares giving up early gains, closing in the red as the Union Cabinet on Wednesday did not take up the proposal for providing financial relief to the debt-laden sector, as was largely expected. Bharti, in fact, was down 0.4%. Vodafone Idea was down 2.5%. Cryptocurrencies, including the top one, Bitcoin, licked their wounds on Wednesday, a day after El Salvador's historic adoption of the crypto asset as legal tender caused chaos online and on the street. Bitcoin last traded at $46,560, having endured wild trade the day before, in which it hit a near 4-month high of $52,956. Then it plunged, its largest fall since the 2nd of June. In fact, at one point on Tuesday, it was down 18.6%, wiping out $180 billion from the market. Ether fell 11.99%. Major cryptocurrency exchanges, Coinbase Global, Kraken, all facing delays in some transactions on their platforms. Analysts say the sharp retreat was partly due to investors who had bought the rumor of El Salvador's move, now selling the fact. Shares of blockchain-related firms also fell as crypto stocks were hit by trading platform outages. But the major focus was on El Salvador, where the government had to temporarily unplug a digital wallet to cope with demand. The Union Cabinet today approved the proposal for production-linked incentive or the PLI scheme for specific segments in the textile sector. A budgetary outlay of 10,683 crore rupees over 5 years has been earmarked for the scheme. The CCEA also approved an increase in the minimum support price or the MSP for Rabi crops for 2022-23 marketing season. The increase is in line with the government's announcement of fixing MSPs at a level of at least 1.5 times of the All India weighted average cost of production. As promised, our special segment on Wednesdays, Ask Udayan, where Udayan answers all your stock-specific queries. The Indian stock markets continue their winning run. In the past few weeks have seen the index touch new highs. At such a time, the need for quality and more information on stocks and investment strategies couldn't be more. That's exactly what we will do every Wednesday with Udayan on this show. So keep sending in your queries to us on the number on your screen and we'll answer a select few on TV as well as online every Wednesday. So then to begin with, let's get a sense of markets where they stand currently. With continuous highs being seen and momentum intact, it really does look like a correction is nowhere in sight.
Well, Aabha, this market has confounded a lot of skeptics and critics who've called for correction periodically over the last many months, and it's just kept rolling one way, that is upward. And I think pretty much that's what we saw over the course of the last 1 week, and even today as well, that a whole host of sectors have actually come together, led by Reliance, and we are keeping our head well above that 17,000 mark quite effortlessly. Flows have picked up from foreign institutional investors, and they're keeping the market warm with liquidity. And we haven't had any great adverse news as well, which will stop the party on its tracks, whether it's global or local. So it's a market which is quite interestingly poised, because there is on one hand some concern about IPO valuations and the frenzy that we're seeing in that pocket. On the other hand, we are seeing a nice mix of large caps and mid caps continuing to roll forward. Yes, is the market overdue for a correction? Completely so, but that's been the case for a long time now. So there's no second guessing when that might happen, so might as well enjoy the party.
Well, let's take some of our viewer queries now. Our first video question today is from Yahya Kamal, who is from Malappuram, Kerala. Let's watch.
Hi sir, I am Yahya from Kerala. In my portfolio, I have 100 Biocon at 398 and 150 CPLA at 945. It would be highly helpful me if you could share your views for short time. Can I exit now from the counter, or can I wait for a better valuation, please?
Hi Yahya, I get your question on CPLA, and CPLA is a good stock to own in your portfolio, no question about that. In my book, it's one of the best blue chip pharmaceutical stocks you can own in India, alongside a handful of other names like, say, Divi's Labs, and more recently even Sun Pharma after a long consolidation. CPLA is not an exciting stock. There are far more exciting names in the mid cap and small cap pharmaceutical basket, but it's one of those really strong, steady performers with a very good management. And if you are the kind of investor who's looking for a steady 15 to 18% kind of compounding year after year, then I think CPLA is the kind of stock for you, because it's got a very strong core India portfolio, which does very well, though not as well as it has done this year, because this year was exceptional because of the COVID drugs that CPLA runs. So maybe in the future, the India business might slow down a little bit, but the US business is also chugging along very nicely for CPLA. So if you look at the India portfolio and the American portfolio, I think there's a very good chance that CPLA continues to grow at a compounded pace of maybe 20% plus between fiscal year 22 and fiscal year 24. And if that is the case, then I don't think you should have any problems getting your 15-18% return from CPLA year on year. You've bought at pretty much around the current market price, and I think it's a stock which is worth holding on to your portfolio. This is not a recommendation to buy the stock, of course, from me, but just an assessment of CPLA's worth as fundamental worth as a company.
Okay, another query by Sagar Sethi, who is from Fazilka, Punjab. His question is, what's your view on Tata Motors? They are first movers in e-vehicles but have huge debt and, of course, are reeling from the chip shortage as we're seeing across the auto industry. What do you think of them?
Well, I disagree a little bit about the Tata Motors bit about being an early mover, because if you compare it with some of its global peers, it appears to me that Tata Motors is actually lagging on the electric vehicles front. Some of its global peers seem to be moving faster on that front. So we need to see far greater evidence that JLR is actually moving ahead full steam on the electric vehicles front before jumping to any such conclusion. But Tata Motors' recent problems actually emanate from the semiconductor chip shortage which JLR has been facing, because of which numbers have had to be scaled back. So a combination of these two factors, the chip shortage and the fact that JLR is moving a bit slower than its rivals on the electric vehicles front, makes me a bit cautious about Tata Motors in the near term, not least because of how well the stock has performed from its lows last year. I mean, from the lows of 75.80, it's more than quadrupled. But after hitting those highs of 350, it slowed down, and it's sort of stalled. Now it's grinding around the 300 rupee mark. And if the market were to correct significantly, I think we could even see Tata Motors at a lower level. In the near term, I would be surprised if the stock takes out its near-term high of 350 and moves higher. So I would remain a bit skeptical about prospects just for the near term with Tata Motors.
Chinmay Biswas from Kolkata wants to know your views on Indian Oil or IOC as well as Coal India. Those are the couple of names in his basket, and he's wondering what the outlook would be. And I find it interesting that he's picked PSUs and old economy names then.
Yeah, I'm not a big fan of PSUs, Aabha. No problems with the old economy as such, but public sector stocks I'm a bit cagey about at the best of times. IOC is not a bad company, but it's just that there is no great excitement in that counter. Now the government is saying once again that it still wants to get BPCL divestment done by the end of this year. Now if that were to happen, then you will probably find some kind of impetus coming back or excitement coming back in the IOC counter as a rub-off from the BPCL privatization or divestment program. But till that picks up and markets get a sense that it is really happening, I think IOC will continue to grind in the kind of range that it has been, 100 to 115. Fundamentally, it's not in a bad place right now because following Hurricane Ida, we can see that globally refining margins have picked up quite a bit, and they might remain on the firmer side now for a while. Also, post the lockdowns, we are seeing volumes pick up in the fuel market. So both from a volume point of view and a GRM point of view, IOC is not in a bad place. But not too many investors actually want to buy public sector oil companies at this point in time. So my guess is that IOC remains in the 100, 110, 115 kind of range. If BPCL happens, then you might see the stock snap out of that range. But otherwise, this is not a stock which was going to give you outsized kind of returns in the foreseeable future.
Okay, let's go to another question from Siddharth Kumar in Surat. Let's take a look.
Hello Udayan sir, what is the future of TVS Motors? Thank you.
Okay, so TVS again, we get back to the auto sector, which I'm not entirely convinced about for the near term. But we've had a big disruption in the auto space with COVID over the last year and a quarter. Now things are bouncing back, and on the low base, it is true that companies like TVS Motors won't do badly on the growth front for the next couple of years. It's actually a pretty well managed company, but better on scooters than on motorcycles. But for all these two-wheeler companies, there's a big disruption ahead, which is what is going to happen with electric two-wheelers. Ola has fired the first salvo. There is considerable excitement with demand and order bookings with that Ola Electric. So we'll have to monitor this space. If the market gets skeptical about the prospects of old generation two-wheelers compared to electric vehicles and feels that EVs or electric two-wheelers will cannibalize a large part of the growth of scooters, then TVS Motors will struggle to perform as a stock. Generally speaking, I would imagine that TVS Motors should have a couple of good years ahead. But if one wants to play the trend of premiumization, which is buying more expensive two-wheelers, then I would say Bajaj Auto, probably given its portfolio, is in a slightly better space than TVS Motors. So on both those fronts, in that better choices might be available in the two-wheeler basket, and the electric vehicle or electric two-wheeler risk which is looming ahead, I would say don't go overboard on TVS Motors. If you own it in your portfolio, that's fine, but I think there are better avenues for appreciation in the market right now.
All right, Udayan, thanks so much for taking all those queries. That's all we have time for on the show. And if you have any more questions related to stocks that you'd like to ask Udayan, simply send those in, WhatsApp us or call us on the number on your screen. We'll answer them next Wednesday. The last 12 months have been particularly hard for the Indian middle class. Financial hardships due to job losses coupled with the COVID monster have hit finances like never before. The plight is highlighted by none other than the Reserve Bank of India, whose report throws the cover of middle class distress.
The economy has been in heavily distressed
I had taken loans, not even gold loan. I have also taken the personal loan for the survival. We will be surviving on these loans and be paying the EMI.
It was a double whammy for Gyanendra Gupta. He has a job now, but things were challenging a few months ago. Money was tight, there was no let-up in expenses. Forced by circumstances, he had to take out 2 loans. Crores around the country are in the same boat as Gyanendra. Millions of households are facing unprecedented economic challenges. 3 reasons have forced their hands: job losses, salary cuts, and medical expenses in the treatment of COVID and related complications. If not salaries, where is the middle class getting its money from? An RBI survey shows the source. A whopping 27,000 crore rupees has been raised in the August 2020 to July 2021 period by Indians by mortgaging their gold. This is 77% higher than a year ago. Loans have also been taken against fixed deposits, a financial staple of the middle class and particularly of senior citizens. Indians are also purchasing on credit. Buy now, pay later. A fact displayed by the steep rise in credit card outstandings, which are at a record high of 1,11,000 crore rupees. There is a real fear of borrowers falling into a debt trap.
People are taking loan for their survival, even for buying the basic necessity. So they are charging high rates for the same. They are charging 24% annualized basis. We will be surviving on these loans and be paying the EMI, and may not be having some cash in our hand for even paying this school fees.
The reason is clear. Interest rates on gold loans are sky high, particularly those of non-banking financial institutions. Even top lenders like SBI, ICICI Bank and HDFC Bank charge high interest rates on gold loans. These are, however, considerably lower than non-secured personal loans taken by many to tide over budget deficits.
As soon as the margin requirements they rise, people they need to deposit a bit more money with these institutions, probably which hasn't happened, and that is why we saw a higher distress there and a higher number of auctions, which I feel can continue for probably another quarter.
The festive season is approaching, and it's a time when traditionally people step out to buy gold. But this time, things might be a little different. Most of the people at the moment are wondering how will they get back the silver which they had mortgaged due to financial duress. And due to COVID uncertainty, it looks like they will not be able to. This is Aishwarya Paliwal reporting for India Today with camera person Alok Das.
Good news for credit card and debit card customers who make recurring one-click payments via debit card and credit card on merchant sites for buying consumer durables, groceries and paying subscriptions for OTT, amongst other things. The RBI has taken 2 sets of measures to helping customers in faster checkouts at merchant outlets. For more on what this means for customers, we're joined by Anand Adhikari, Managing Editor, BT Magazine. Anand, thanks for joining us. Tell us, what does an RBI token mean and how do customers benefit? Why is it needed in the Indian context?
Aabha, as you know, RBI has banned the e-commerce website from storing card details from January next year. Now this means card data stored at merchant site will be disabled. Leading to failure of recurring payment mandates, and also requiring customer to punch in their 16-digit card number every time they do an online transaction. So tokenization is something which the industry was demanding. Now for a layman, tokenization is like hiding the card information and replacing them with a one-time token or codes. So RBI has taken 2 steps in this regard. Now it has expanded the tokenization on devices from like mobile, desktop and tablets to even wearable devices like wristband and wrist watches. And second, it has allowed tokenization on file, which means allowing customer to pay through multiple devices with a single stored card. Now tokenization is done only by the card networks like Visa, MasterCard, or by the issuing banks. So it is much safer. So customer data is stored safe with Visa and all these issuers, and it is also protected from any data breaches and theft.
That helps us understand better what tokenization aims to do. Anand, thanks so much for joining us with that. Maruti, the country's largest automaker, released its latest round of production data for the month of August today. Remember that car makers have been reeling from chip and component shortages at the moment. And in the latest round of data, in fact, that we saw come out from Maruti, we actually saw a sharp dip in production coming in. Close to 8% of a dip coming in on production this time around for the month of August 2020. Just 123 and 769 vehicles in August. The figure slipping to 113,937 in August 21. Now that's the steepest production dip also in the popular mini and compact subsegments of passenger cars. In August 20, the company had produced 89,556 units. The number in August 21 was 67,972. That's a massive 24% dip. Production of mid-sized passenger cars rose to 3,001 units in August 21. That's up from 1,190 units in August 20. Overall, passenger car production fell from 90,746 units in August of last year to 70,973, a 21.78% dip that we are seeing for Maruti. Stock exchanges can soon transfer shares and money into client accounts within a day, with market regulator SEBI set to usher in the T+1 or Today Plus One settlement cycle for equity transactions from January 1st, 2022. Currently, this process takes 2 days. So what does this mean for investors and for the overall market? For more on the story, we're joined by BT Magazine's Senior Associate Editor Ashish Rukhayar. Ashish, tell us, what is T+1 all about? More importantly, how is it going to help investors, and are there any concerns as well while using it?
So, Aabha, stock market payments are settled in a slightly different manner if you compare it with the normal banking fund transfer. In a bank, you can transfer funds from one account to another through any of the digital ways, and in most cases, the funds are transferred instantly. Right. That doesn't work in the stock market, where trades take 2 days to settle, and that's why the current mechanism or the current settlement cycle is called T+2, where T stands for the trading day. Now, one of the concerns that they have raised is that the banking system is not geared for the T+1 mechanism, because they say that many investors, especially those in the tier 2 or tier 3 towns, still prefer giving physical checks to their broker rather than transferring money digitally. Now, getting those checks cleared might take more than a day, and hence there will be a mismatch between the settlement cycle and the actual money getting credited in the account. Second concern that they have raised is about foreign investors. Now, foreign investors are one of the most important category of investors in the Indian stock market, and they operate from various countries, various regions in different time zones. And broking firms believe that many of these foreign investors might have practical difficulties transferring the money in a day's notice. So again, there will be a mismatch between the settlement cycle and the actual money getting credited in the account.
Right.
So there are two aspects of this, and one will have to wait and watch to see when the stock exchanges, if they implement the shorter settlement cycle, whether it will have a positive or a negative impact on the markets.
All right. Ashish, thanks for explaining that to us so well. Really makes it clear for the investor, and lots of new norms and new changes that are being applied to trading at the moment. So important to keep track of that. Now, it's official. The big Apple event is happening on September 14th. And if the innovative AR invites are anything to go by, then the theme for this year's event is California streaming. What can we expect from the most anticipated tech launch of the year? Our technology editor, Ayush Alavadi, tells us all we need to know.
Well, it's that time of the year again. Tech-tember is upon us, and we can expect a number of announcements from Apple Park because it's time for the Apple Fall event. Can we expect a new iPhone, an Apple Watch, AirPods? What's up? Well, here's all you need to know.
Based on reports by noted tech bloggers John Prosser and Mark Gurman, the much-awaited iPhone 13 lineup will sport a smaller notch, an A15 chip, and the Pro models will finally come with a 120Hz ProMotion display, a feature announcement that tech enthusiasts have been waiting to hear. The company might also debut a portrait mode for video on its Pro models.
Well, if you purchased the Apple Watch Series 6 only recently and you're into fitness like me, well then this is the point where you might regret that decision, because the Apple Watch Series 7 is coming and it's going to house a flatter display, a feature announcement that tech enthusiasts have been waiting to hear. The company might also debut a portrait mode for video on its Pro models. Well, if you purchased the Apple Watch Series 6 only recently and you're into fitness like me, well then this is the point where you might regret that decision, because the Apple Watch Series 7 is coming along with 2 new sensors, one for blood sugar monitoring and the other one for temperature.
If you're in the market for an iPad mini, then you must wait for the fall event because a long overdue upgrade to the iPad mini might be on its way. Thinner bezels, a Type-C port, no home button and Touch ID integrated into the power button itself. This is by far one of the biggest updates to the iPad mini lineup.
If you are into Apple products, then you are also into the ecosystem of all these products. And to complete that, well, they need to launch another generation of AirPods. Only on for show, but the new AirPods 3 might be released at this event. And the AirPods 3 will look a lot less like the AirPods 2, which I have in my hand. They'll have a shorter stem and look a lot more like the AirPods Pro, but without active noise cancellation. So that's what we expect at the event. But one thing is for sure, it promises to be an action-packed cracker of an event. Stay tuned to Business Today for more.
And that's where we leave it on the show today. Thanks so much for watching. Good night.